Hi everyone, it's Andy Hill speaking of Andrew Hill Investment Advisors. And today I wanted to talk about our top equity holdings. Before I dig in to the individual companies, I wanted to share with you that since we individually manage each and every portfolio, the top holdings from one client to another may differ. So with that, let's talk about our first holding, Helmerich & Payne. They are the leading U.S. land driller for oil and gas and a key beneficiary of the increase in domestic energy production. They've done very well over the last year, primarily due to their superior technology and a very clean balance sheet that has very little debt. One of our other largest holdings is Gilead Sciences. They are a growth-oriented biotech firm providing therapies focused on life-threatening major diseases including HIV and the liver diseases. Their drugs in HIV, cancer, and now hepatitis C, led by the FDA approval of Sovaldi, make them one of the top biotech firms. John Deere, well, the two previous holdings have done very well in their stock performance recently. John Deere hasn't. We consider that a value holding. However, yesterday in a rough market, John Deere's stock actually rose about 1.5%. Their stock has been weak, primarily due to low corn prices. Many analysts expect, due to farm income being down from prior years, that they're going to drop off the purchase of new equipment. However, that's failed to materialize. While their sales aren't growing rapidly, they're at least holding in relatively well given the rapid sales that have occurred in the last couple of years. We do like John Deere stock for the long term and consider it a good holding offering above average return potential over the next couple of years. Google. Certainly most people recognize them as the leading firm to provide search over the internet, but some of their other businesses are quite interesting, and certainly also the way that they're developing advertising revenue from these various modalities. And I'll point your attention to YouTube, a holding that most people don't even know is owned by Google. I think could become the television of the future. Government Properties Income Trust is a real estate investment trust and offers a high dividend yield of approximately 7%, which makes it a good holding because it does offer a stable income. Now, their growth potential isn't significant, but we are very comfortable with their stable base, which is anchored by their largest customer, the IRS. Qualcomm. Well, we've shied away from investing in more risky social media plays. Qualcomm is a great way to do it with a quality company that's been around for decades. They are the leader in providing semiconductor chips into mobile applications such as smartphones. Despite much competition coming from the likes of Intel, they have been able to retain their top position, and today announced a rather significant increase in their dividend, which led to the stock increasing by about 4%. Apple Computer. Most people recognize their name and their focus on quality, reliability, and functionality, and about half of the revenues now come from the smartphone market. The sale of Motorola from Google to Lenovo, a Chinese company, may actually offer some sales opportunity for companies that wish to buy from U.S. companies. Apple now will be the only provider of smartphones with a U.S.-based corporation. The key thing with Apple is we're waiting for the next major product announcement. Well, done very well with tablets and phones, and certainly Macs have held up better than the overall PC industry. We're looking for something new. NextEra Energy. It's a utility, but has done extremely well. Most people think of a utility as a slow, boring company with a nice dividend yield. Well, actually, NextEra Energy has outperformed the S&P 500 with low risk. As you probably recognize, their FP&L division has done very well, offering stable growth and some upside from the migration into Florida. Their alternative energy area has become the leading provider of wind and solar power in the country. Copa Airlines. Copa is a smaller company than some of the others I've just discussed and is the leading provider of air travel to Central and South America. They've been a beneficiary of the growth in the Hispanic population in the United States. However, there is one key risk to the stock, which has been reflected in its weak performance year to date, and that's their exposure to Venezuela, where about $460 million of their cash still resides, and it's a risk if they'll be able to repatriate that back into Panama, their home country. General Electric, well, most people recognize the name, been around about 100 years. What we see as an opportunity with GE is in two areas. First, their focus on infrastructure and energy offers certainly good revenue growth. At the same time, they're looking to divest their finance division, which has certainly been a problem during the financial crisis. Stock offers a reasonable dividend of around 3%, and the stock is selling at less than a market multiple of earnings. Lincoln Financial. Lincoln is an insurance company providing products to the mass affluent. The opportunity for Lincoln is that during the financial crisis, many people put off buying life insurance or saving for retirement. They have various products that help the mass affluent take care of that and plan for the retirement. Other holdings, we'll go through these pretty quickly, that are smaller and less significant. Amazon is certainly in a lot of accounts. We know who they are. SunTrust, bank in the southeast that is doing very well. Merck, we're very impressed with the pipeline of new drugs coming on, as they've lost a number of the major blockbusters of year prior that have gone off patent. United Natural Foods, provider to Whole Foods and others in the organic space. Trimble Navigation, which focuses on equipment and construction efficiencies. Ecolab provides products to help clean hotels and the hospitality industry, as well as moving into the water business and assisting in the energy sector, a fast-growing area. Synoptics. Synoptics handles a lot of the touch devices on your computer, and now moving into the biometric areas through fingerprint security. Allergan. Most people know them for their eye care and their legacy around the Botox product, which is used in both cosmetic and therapeutic applications. Johnson & Johnson, company's been around for a long time in the healthcare industry, widely diversified product lines. We like Johnson & Johnson because it offers a degree of safety when we hit rough patches in the stock market. It's a stock investors quite often go to during times of stress. And finally, FireEye. FireEye is a company in the area of computer security, certainly and unfortunately a fast-growing industry due to all the cyber threats that are constantly approaching us. So those are our key holdings, and if you have any particular questions, as always, feel free to email me or Jennifer Figarelli. And thank you for tuning in today.